AI is absolutely everywhere these days. I mean, it's constantly making headlines. It dominates conversations. Seems like it's reshaping entire industries. But for a major tech giant, what does all that buzz, the innovation, the sheer demand actually look like when you dive into the hard numbers? Today, we're taking a deep dive into Dell Technologies' fiscal year 2026 second quarter financial results. Our mission, really, is to go beyond those headlines, to unpack the most important nuggets of knowledge, the insightful takeaways from their recent earnings call and their investor presentation. We're going to zoom right in on how they're not just participating, but actively accelerating in this booming AI market. And critically, what that means for the broader business world and also for the technology you might use every single day. Okay, before we jump in, just a quick but important note for you. Dell's report, like a lot of companies in the tech industry, uses what they call non-GAAP financial measures for many of their figures. Now, for those maybe unfamiliar, GAAP stands for Generally Accepted Accounting Principles.
Non-GAAP numbers, well, they essentially exclude certain items, things like one-time costs or maybe stock-based compensation, things that might kind of obscure the underlying operational trends. It's really a way for companies to highlight what they see as their true ongoing business performance. So we'll be focusing on those key figures to understand Dell's trajectory. Okay, let's unpack this really remarkable quarter. Looking at Dell's second quarter, the headline numbers, I mean, they certainly grab your attention. They reported a record revenue of $29.8 billion. That's not just a big number, it's a solid 19% increase compared to the same quarter last year. Pretty impressive. And their non-GAAP diluted earnings per share, that hit a Q2 record too, $2.32, also up an impressive 19% from last year. These figures aren't just about growth, are they? They speak volumes about effective operational execution.
Yeah, they really do. And what's truly fascinating here, something often overlooked if you just glance at that top-line growth, is how they actually achieved this. Jeff Clarke, he's Dell's vice chairman and COO, he highlighted that despite this significant revenue surge, operational expenses were actually down by 4%.
Wow, down, with revenue up 19%.
Exactly, and this is a key indicator, because it shows Dell isn't just riding the AI wave passively, they're actively optimizing their core operations. It means they're not just selling more, but selling smarter, really setting themselves up for long-term resilience, even as they pour resources into R&D for future growth.
Right, like trimming fat while building muscle.
Precisely. Think of it as a well-oiled machine. Growing revenue, but simultaneously improving efficiency elsewhere. And on top of that, they generated a really robust $2.5 billion in cash flow from operations. Plus, they returned $1.3 billion to shareholders through repurchases and dividends. That shows a company demonstrating, serious financial health, a clear commitment to value creation, and a very strong balance sheet that lets them keep investing strategically.
Okay, so if those big overall numbers caught your eye, the real story, the absolute engine behind this incredible growth, is undoubtedly AI. It's not just a tailwind anymore, is it?
Yep.
It feels more like a hurricane of demand, and Dell seems uniquely positioned to ride it out. Let's really dig into how deep this AI integration goes. Dell is seeing exceptional, almost unprecedented demand for AI servers. They booked an astounding $5.6 billion in orders just in Q2, and at the same time, shipped a record $8.2 billion in AI solutions. And get this. They've already shipped $10 billion worth of AI solutions in just the first half of their current fiscal year, FY26. Now, to put that in perspective for you, that's more than their entire AI server shipments for all of last fiscal year combined.
It really is.
That kind of acceleration is just, it's mind-boggling.
It truly is a monumental shift. And if we connect this to the bigger picture for businesses, it's not just about selling powerful equipment, right? It's about being at the absolute forefront of innovation and, crucially, rapid deployment. Dell highlighted their incredible speed to market. They were the first in the world to ship both the NVIDIA GB200 NVL72 solution last year.
The GB200, okay.
And then the GB300 NVL72 just this past July, notably to a major player like CoreWeave.
Okay, maybe unpack that alphabet soup a bit. NVL72, CoreWeave.
Right, good point. So NVL72 basically means a massive interconnected cluster. Think 72 of NVIDIA's most powerful GPUs, graphics processing units, all working together like a single supercomputing brain housed in a specialized rack. And CoreWeave, well, they're a high-growth cloud provider. They specialize in GPU-accelerated stuff. Essentially, they build the infrastructure that powers many of the most demanding AI applications out there.
Got it. So being first to ship these superclusters to someone like CoreWeave is a big deal.
A huge deal. For companies like CoreWeave, getting their hands on the absolute latest, most powerful chips like the GB200 and GB300 first gives them a massive competitive edge. It's like being the first to get the fastest racing car on the track, you know?
That makes sense.
And this is critical in an environment where time to solution is just a huge differentiator. Dell's ability to deliver these bleeding edge solutions so quickly, well, it isn't just about manufacturing. It speaks to deep strategic partnerships like with NVIDIA and a really robust global supply chain that can, well, move mountains. This rapid, reliable deployment of these large-scale clusters combined with their own engineering and manufacturing value add that's directly driving margin improvement within their AI segment. And their pipeline for AI opportunities, it continues to grow sequentially. We're talking double-digit growth across enterprise and sovereign opportunities. Shows this demand isn't just a flash in the pan. It's a sustained global trend.
So with this explosive demand for the AI servers and Dell's quick deployment, what are the sort of practical implications for businesses? You know, the ones eager to actually harness AI. How's Dell making it easier for them to adopt and integrate this powerful tech?
That's a great question because raw power isn't enough, right? You need a way to deploy it effectively. Dell offers solutions like the NVIDIA RTX Pro 6000 AI factory solutions.
AI factory solutions. What does that mean exactly?
Right. So when they say AI factory solutions, think comprehensive end-to-end packages, basically turnkey offerings. They're designed for maximum performance, flexibility, and power efficiency across the whole AI lifecycle. So that means everything from, say, initial data prep and model training all the way through to inference and deployment, making it work.
So cradle to grave for an AI project.
Pretty much. And they're seeing that double-digit growth in these enterprise and sovereign opportunities across really diverse sectors, financial services, healthcare, manufacturing, you name it. It's a truly comprehensive approach designed to make these complex AI deployments more accessible.
And the innovation, it sounds like it spans the entire data center, not just the GPU itself. They're thinking about the whole ecosystem around these powerful AI systems.
Absolutely. I mean, think about the infrastructure needed just to support, say, 256 NVIDIA Blackwell Ultra GPUs in one rack. That's immense power, immense heat. So Dell's integrated rack scalable systems are designed precisely for this. They offer choice in everything, rack style, thermal management.
Like liquid cooling?
Exactly. Sophisticated liquid cooling, which is becoming pretty essential for high-density AI or traditional air-cooled systems, and choice of processors, too. Intel or AMD supporting these massive deployments. They're also pushing the envelope with some groundbreaking solutions, like the Dell PowerCool Enclosed Rear Door Heat Exchanger.
Okay, what's that do?
Well, it's not just a fan. It's an intelligent system. It captures and removes heat directly from the back of the server rack. And the kicker is it can potentially reduce cooling energy costs by up to 60%.
60%. That's huge for a data center's budget.
Massive.
Yeah.
For operational efficiency, for sustainability, huge. And then there's something called Project Lightning, which they're touting as the world's fastest parallel file system.
Parallel file system.
Yeah.
Why is that important for AI?
It's crucial. It allows data to be accessed and processed simultaneously by many different components. It eliminates bottlenecks when you're trying to feed those huge data sets to all those hungry GPUs. So this entire ecosystem of offerings, it positions them really strongly in an AI hardware and services market that's projected to exceed $350 billion by 2028.
Wow.
Yeah, growing at an impressive 18% compound annual growth rate. It's clear they're capitalizing on this significant growth by providing these comprehensive integrated solutions, not just, selling components.
Okay, while AI is clearly the headline grabber, it's important to remember Dell is, well, it's a massive enterprise with diverse revenue streams. So let's pull back from the AI spotlight for just a moment and look at how their other core business segments are doing. Because a company's overall health isn't just about one shining star, right? The Infrastructure Solutions Group, ISG, that includes their servers, storage, networking. It delivered record revenue of $16.8 billion, a huge 44% jump year over year.
44%, yeah.
Within ISG, servers and networking were the big stars there, soaring 69% to $12.9 billion. Storage, however, saw a slight dip, down 3% to $3.9 billion.
Right, and this immediately brings up an important question, doesn't it? How are they sustaining that traditional server growth alongside the AI acceleration? It's not just coincidence.
Yeah.
Jeff Klur mentioned 6 consecutive quarters of traditional server revenue growth. That speaks to a strong underlying market. Plus, they've just completed the launch of their 17th generation server portfolio.
The 17th gen, okay.
Yeah, and this isn't just an incremental update. These servers are designed for, ultimate performance, reliability, security, but importantly, they're specifically helping customers consolidate older workloads.
Consolidate, meaning replace older servers.
Exactly. Think of it like upgrading from an old, maybe inefficient server farm to a sleek, powerful new data center setup. This consolidation, it frees up valuable rack space, power, cooling resources, making room for those new power-hungry AI deployments we talked about. And it drives overall data center efficiencies.
So the traditional servers actually help enable the AI shift.
In a way, yes. And it's a significant refresh opportunity for Dell. Get this. Over 70% of their installed base is still running on 14th generation servers or even older.
70%. Wow, that's a lot of potential upgrades.
A huge wave waiting to happen. And in storage, despite that slight overall dip you mentioned, power store demand grew double digits for the 6th consecutive quarter. This really underscores Dell's #1 positions in several critical storage categories. Things like AI-centric storage, external RAID, converged systems, hyper-converged systems.
Okay, can you quickly break those down? External RAID, converged, hyper-converged.
Sure. External RAID just refers to those robust, high-performance storage arrays that attach to servers, pretty common. Converged systems integrate computing, storage, and networking into a single pre-configured package. Makes deployments simpler. And hyperconverged systems, or HCI, they take that a step further, collapsing all those elements into a single software-defined platform, often running on standard servers. Very flexible. So Dell's leadership across these diverse areas, especially in what they call AI-centric storage, highlights their ability to adapt and lead even in these more traditional segments.
Okay, that gives us a really clear picture of the ISG side, the infrastructure. Now let's flip over to the Client Solutions Group, CSG. That's the PCs, workstations, monitors. Revenue here was up, but only modestly, up 1% to $12.5 billion. Commercial client revenue saw a 2% increase, which marks its 6th consecutive quarter of demand growth. That's pretty solid. But consumer revenue was down 7%.
Yeah, a bit of a mixed picture on the revenue front. But interestingly, CSG actually improved its profitability sequentially. That was driven mainly by robust demand from small and medium businesses. So that commercial client growth is a solid sign, suggesting businesses are still investing in hardware. They see it as a crucial tool for productivity.
Makes sense.
But what's particularly interesting here, I think, especially for you listening, is their PC portfolio for the AI era.
AI PCs. We hear a lot about those.
We do. And Dell isn't just offering, faster processors. They're strategically positioning streamlined AI PC lines. They've got Dell, Dell Pro, and Dell Pro Max. They feature the latest silicon from Intel, AMD, and Qualcomm. And this shift is really about bringing AI processing onto your device, using these new chips.
On the device itself, not in the cloud.
Exactly. So, for example, the Dell Pro Max Plus laptop, it boasts the world's first mobile workstation with an enterprise-grade discrete NPU.
NPU, neural processing unit.
That's it. It's dedicated hardware specifically designed to handle AI tasks right there on your device, not sending data back and forth to the cloud. Think of it like adding a dedicated AI engine directly into your laptop.
So what can that do?
Well, tasks that used to require the cloud things like real-time language translation, maybe advanced video editing, even running complex AI models locally can happen right there, faster, more securely. They mention components like the Qualcomm AI 100 PC inference card, enabling this. So this means your next laptop, well, it could handle complex creative tasks, advanced analysis, maybe enhance privacy features directly and privately without relying on external cloud services all the time.
Interesting. A fundamental shift in personal computing.
Potentially, yes. And Dell holds #1 positions in commercial AI PCs, PC monitors, and workstations, too. So they're showing strong leadership in these profitable segments. It shows it's not just about the data center. It's about making AI a fundamental part of your everyday desktop and laptop experience.
Okay, so if we tie all these threads together, the picture that emerges from Dell Technologies' second quarter, it's incredibly clear, isn't it? And remarkably strong. Record revenues, record earnings. They've demonstrated not just resilience, but exceptional strategic execution, and it seems largely propelled by their accelerating momentum in AI. From those massive data center deployments fueling the global AI infrastructure, right down to the very PCs potentially sitting on our desks, AI is not just a buzzword for Dell. It's clearly driving tangible financial results and significant product innovation across our entire portfolio.
Indeed, it really does. It highlights Dell's significant strategic advantage, doesn't it? They're leveraging their longstanding leadership positions, that vast global supply chain we mentioned, their expansive go-to-market engine. Leveraging all that to not just react to, but to truly capitalize on these frankly, unprecedented growth opportunities in AI. And their long-term financial framework, it aims for consistent growth. They're targeting revenue growing 3-4% annually and diluted EPS growing over 8%, alongside robust shareholder returns. It's really a testament, I think, to how a focused and agile approach on emerging transformative technologies can profoundly impact an established company. It keeps them incredibly relevant and competitive in our, well, rapidly evolving digital landscape.
So thinking ahead, given Dell's really rapid acceleration in AI and just the sheer scale of their current and projected AI server shipments, how do you think this will influence the broader tech landscape over the next few years? And maybe more personally for our listeners, what will your next personal computer truly be capable of with this kind of on-device AI power? How might that redefine productivity or maybe even creativity in the years to come, especially as these capabilities become more widespread, more integrated into the software we use every day?